You say be wary, be mistrusting. You are obviously not suffering from FOMO. Why not?
Well, we've got some exposure, but we're trying to cover the risks. I think our biggest concern is trying to understand exactly what this rally is based on, because there aren't any fundamentals at the moment. We've got no idea what earnings are. We've got no idea what outlooks are. Technicals don't work in this environment. So as far as we can see, this is all entirely psychological. It's as if the market's had some kind of a psychotic episode.
In terms of where the equity story goes from here, Paul, and we have this up on a, of course, terminal chart for the additional context, what is emerging is that already the rally that we're seeing in U.S. equities is far outstripping a lot of the year-end forecasts from key strategists in the game. Is your view that we're going to end at a certain level that is around where we are at the moment?
We have no idea where the end is going to be, and we're mistrustful of just about every single estimate that we get, and I think that's really the problem right now. If you look at 1929, then we had a huge rally from the low going well into 1930. So if this were to be a repeat of something like that, we don't know how long this rally can last, because, like I say, we just don't know what this thing is founded on. There's a couple of things that really worry us short term, a couple of sort of really loud alarm bells that are ringing. One is obviously one of the top stories at the moment, as you two were talking about, is dollar weakness. Last time we had dollar weakness like this, it was February of this year. Dollar weakness can be a canary in the coal mine. It can actually be a barometer of just how weak global demand is, particularly if we're talking about euro-dollar weakness, which is the thing that affects exchange rates most. The other thing that strikes as a canary in the coal mine is, a lot of times when Tesla makes a new high, that's a sign to bail out of just about everything, because it often precedes something pretty ugly to follow it, and particularly, Tesla with all the fake receivables story doing the rounds right now. To us, that just emphasizes that, we don't know where we are. Nobody knows where we are. We don't have a compass for these markets. We don't have a map for these markets. Nobody knows where we are. You have to be really careful. The one thing that looks like it's reasonable value is the thing that everybody's starting to hate, which is the long treasury.